You are completely scamming yourself if you are still trading support and resistance and the patterns that come with it in 2026 blindly. So in this video, I'm going to talk about how changing my way of looking at price action actually has ended up saving me and making me tens of thousands of dollars in the markets. And by the end of this video, you're going to be able to apply that framework yourself and hopefully avoid some of the traps and flawed systems that many traders are taught when they first start. So right here, we have an example of what many traders would call a resistance breakout, and they would look to long here. Okay. Now, I know this because I'm on, trading social medias, and a lot of people were talking about how this structure was the most bullish thing ever on the NASDAQ, right? We took out all these highs. We finally get some movement above this level that we had been rejecting, but little do they know, if you look to the left of the screen, you will see a daily bearish fair value gap right here. Now, with that context, this is not a good long, especially once the daily closes. You can see we actually start to sell back off, which makes this a pretty bearish look. So what's going to happen up here, like I said, longs are going to chase this breakout. Shorts have likely already been stopped out. This is buy side liquidity. So all the buy stops that were resting near all of these highs are probably taken out. And so then that's when the market's going to make the real move. Once the longs have gotten in late and chased, and once the shorts are out, then the sell-off happens, right? And the shorts that were in up here that got out don't even actually get to capitalize on the kind of correct overall bias they had about the market. But once again, if you just trade support and resistance blindly and try to take that breakout without understanding the context and the meaning of this bearish gap here, you are likely going to lose money, or you probably are one of the people who lost money trying to long up here, which are many people. And I know it because I've seen it with this specific example about 2 weeks ago. I was actually telling everyone this was a bearish zone. Now, you can literally look the other way. It's very interesting how this panned out. So you can see right here, we have all of these lows, right? All of these lows, that's what people would call a support zone. And it's funny because we're in a range right now. So these recent examples are easy and so applicable. But if you look right here, we end up breaking below the range, right? We break below the range, looks very bearish, but we have taken out all these lows. All of the sell stops, right? All the longs have likely been capitulated here. And then what's going to happen? People are going to chase short. The same people chasing short are probably the ones that chased long up here. And what happens? The market violently corrects back to the upside, right? And this is a significant move on the NASDAQ. From the trough to the current levels, it's up 4.5%. So anyone who was short late down here, best believe they got their ass kicked. So what's the fundamental shift in your trading that can allow you to use these kind of support and resistance concept levels to your advantage rather than getting burnt by them? Because there is no question, a level like this where there are so many highs is a significant level. A lot of people, though, call it resistance and try to trade the breakout. Once again, a level like this is a very significant level. It's what a lot of people would call support. But instead, the framework I would use is wait for one level to get taken out and breached. And if you see it fail to hold, like we have right here, then target the other side, right? And so in this case, the other side would be the blue line, right? So you see the black line, we break out of it. You don't chase here. You wait to see what happens, right? If we have a very constructive hold of this, maybe a retest, and we build genuine bullish structure above it and clear out the bear gaps, then yeah, you can look to like long continuations. But we didn't do any of that. So in this case, you would, okay, see all of these buy stops got taken out. All the shorts are capitulated. Longs are chasing. This is where I look for shorts down to this next key significant level. And that's when you actually get your highest probability trades, which end up panning out. So next up, we have a pattern that we're going to talk about, because these kind of head and shoulders, double top, double bottom, wedge patterns, they all go hand in hand. They're taught with support and resistance, and they are also BS. The reason I say that, if you were to back test every head and shoulders and every inverse head and shoulders on whatever asset you wanted, regardless of the time frame, you wouldn't actually find a statistical edge doing it, because there is discretion involved in figuring out which ones are actually going to play out. So right here, we have a decent looking head and shoulders, and a lot of people are going to try to short here, right? They're going to try to short if we break down. Now, why would this be a horrible head and shoulders to short? Well, let me help you guys understand. Once again, we have a bullish fair value gap right here on the 4 hour that is continuing to hold. We have a daily bullish fair value gap that we tap into. So this entire like head and shoulders pattern that was being built out was simply just a move down to rebalance into internal liquidity, right? And then once we do that, we end up generating a lot of buy side liquidity here. So what's going to happen? We're going to run up. We're going to fake people out. A lot of people might chase to try to short this move, especially on the lower time frames. There were undoubtedly times where this was looking bearish, right? Like right here. A lot of shorts probably chase a move like this because the head and shoulders it's finally breaking down, right? No, it's not. This one is invalid because of the daily bullish fair value gap and the liquidity above that we end up running all of it and making new highs for the cycle, and we get very bullish after this. This is another one of my favorite examples, right? You have a lot of people that talk about channels and stuff, right? So this is a channel right here. This is a channel right here with Ethereum, and this was one of the best examples of what I'm talking about. So you can see right here what's going to happen on a move like this. A lot of people are going to chase it. A lot of people think that that breakout is the real one. They don't realize we have a bullish fair value gap down in this entire range that has not once been tested and needs to be rebalanced into before we can probably truly move higher. So what happens? People chase up here. Shorts get stopped out. Same idea. And they get cooked, right? We revisit the bottom of the range. And then when people think we're breaking down and that we're going to absolutely crash here, we end up just running right back up because we needed to rebalance into this bullish gap. We did. It provided continuation. And by this point, a lot of people that were in like an Ethereum swing trade are probably liquidated out of this position or stopped out or have just given up because the range was so frustrating. That's exactly where I came in and actually made my trade this summer. A lot of you guys probably remember I posted a lot about this specific setup right here once we got here, that it was very bullish, and it was indeed basically the bottom for the summer, and we ended up running over 100%. So you'll see a lot of these like fake breakouts where longs chase and shorts capitulate, and then the short works and nobody's left in it and all the longs are underwater, right? And then you'll see the opposite, right? Like these fake breakdowns where shorts will chase, longs have been stopped out, there's nobody left, and then the real move up happens. It goes both ways, guys. So once again, if you see ranges like this where, you know, the support and resistance levels are obvious, just wait until one of them gets traded into and try to fade it if the conditions around are optimal. Now, there are going to be cases where price is going to continue, where it will break and retest. You will obviously be able to find those. But the point about those is that you usually do that because you rebalance into, you know, some internal liquidity like a fair value gap. So if you're going to be using support and resistance, you need to be using liquidity and fair value gaps as well as an additional confluence. I think the point is of all of this that with support and resistance levels, you should not blindly trade them. You should understand exactly the conditions before you try to use them. So right here, you could say, oh, we just bounced off this low, this is support, or we just bounced off this low, this is support. But if you try to do that without having context of this low down here that's right next to them that didn't get taken, that's likely also going to get taken, you could be, you know, setting yourself up for failure, right? Like right here, a lot of people might have tried to long this after bouncing off this support level. If you don't understand the significance of this low and this low being right there, you might get trapped, right? And look what happens. We end up dumping right back down to them. Okay, so only after all of them are taken out could you maybe start to look for longs. But that's kind of the main takeaway of this video, that support and resistance, yes, it can work in retrospect when you look at hindsight and you draw lines and see where price bounced and why it bounced. But in real time, you need to have a good context of what's around you and what's right above resistance and right below support to really confirm whether you actually want to try to take a breakout or breakdown trade or whether you want to play for a bounce or rejection, right? All of this stuff absolutely has to be contextualized if you want to up your win rate. We'll even do an example of a bull flag real quick. So like, why does a bull flag work and where should you get in? Because a lot of people, this is, you know, good example, I guess, of a bull flag. And a lot of people want to trade the breakout once we break above the high. Now, sometimes it can work, yes, but most of the time that's a poor strategy. What do you actually want to do? What you want to do, if you understand fair value gaps and liquidity, is you want to look and see, okay, first of all, does this leg of price action have any obvious imbalances, right? AKA fair value gaps. If this leg of price action has an obvious bullish fair value gap, you want to wait until that's traded into and then look for a setup in the lower portion of this range. because then you can actually just target all of the liquidity you generated during this consolidation. And so you don't care what happens above here now because you already hit your TPs probably, right? You were looking to get in at the bottom of this range and your TP was the start of the consolidation, right? So that's a better way to play bull flags too. But once again, understanding liquidity and fair value gaps in really at all is going to help you try to figure out how to take this type of play instead of being the person that tries to long up here when the probabilities are lower and you are paying a premium relative to a lot of other people in that long trade, right? That's kind of what it all boils down to. Try to think like smart money, right? Dumb money is going to chase up here. Dumb money, dumbasses are going to chase up here. Now, will it work sometimes and will you get just the most textbook, beautiful continuation? Yes. And sometimes, you can even tell when it's going to happen, when it's likely to happen, if you understand liquidity, right? If there's a very obvious draw, maybe all the way up here, and you break out of this consolidation, maybe you will understand, like, yeah, we're likely to continue. But it's just not a great idea to try to chase breakouts like this, right? And a lot of support and resistance traders or pattern traders do that. It's obviously going to be better to try to long down here when you start seeing signs of strength near the lows, okay? Or the lows of the consolidation. That's just kind of my 2 cents on it. This is the way I changed my way of looking at price that completely changed my trading results, and I hope it can for you too. But none of this is financial advice. This is all just my experience to help you guys out and to hopefully enlighten you to some of the ways that the typical trading systems and rules, kind of the way they're taught, is very flawed and can confuse a lot of people. So with that being said, if you enjoyed this video, make sure to like and subscribe. I appreciate you all for watching. Make sure to click the link in my description for the free trading Discord. It's completely free, no credit card, no email. Literally just hop in and I do lives in there. I answer all your questions, everything like that. So I appreciate you all for watching. I'll catch you in the next one. Peace.